Did you know that failing to file your income tax return on time could cost you up to 10,000 rupees in penalties, even if you don't owe any tax? Let's explore who needs to file and why it matters to you. Basics of income tax returns. Income tax return filing is a crucial financial responsibility that every eligible taxpayer must understand and fulfill. For the financial year 2025 to 2026, corresponding to assessment year 2026 to 2027, knowing the requirements and procedures can help you stay compliant and avoid penalties. Understanding the terminology is the first step. The financial year 2025 to 2026 refers to the period from April 1st, 2025 to March 31st, 2026. This is the year during which you earn your income. The assessment year 2026 to 2027 is the following year, from April 1st, 2026 to March 31st, 2027, when you file your return and the tax department assesses your income from the previous financial year. Filing an income tax return is mandatory for several categories of individuals. If your total income exceeds the basic exemption limit, you must file a return. Beyond income thresholds, certain situations make filing mandatory regardless of your income level. If you own assets located outside India or have signing authority in foreign accounts, you must file a return. Similarly, if you have deposited more than 1 crore rupees in one or more current accounts during the financial year, or if your electricity bill exceeds 1 lakh rupees, filing becomes compulsory. The due dates for filing returns vary based on the type of taxpayer. For individual taxpayers who do not require a tax audit, the deadline is typically July 31st of the assessment year. This means for financial year 2025 to 2026, the standard deadline would be July 31st, 2026. However, taxpayers requiring audit must file by September 30th, while those with international transactions of foreign assets may have extended deadlines until October 31st. The Income Tax Department provides different forms for different categories of taxpayers. Form ITR-1, also known as Sahaj, is for resident individuals with income up to 50 lakh rupees from salary, one house property, and other sources. ITR-2 is for individuals and Hindu undivided families not having income from business or profession. ITR-3 applies to individuals and Hafs having income from a proprietary business or profession. ITR-4, called Shugam, is for presumptive income from business and profession. Proper documentation is essential for accurate return filing. You will need your Form 16 from your employer, which details salary income and tax deducted at source. Bank statements showing interest earned, capital gain statements from mutual funds or stock transactions, and receipts for investments made under various tax saving schemes are all important. Your Aadhaar card and PAN card details are mandatory for filing returns. The consequences of not filing your income tax return on time can be significant. Late filing attracts a penalty under Section 234F, which can be up to 5,000 rupees if filed after the due date, but before December 31st of the assessment year. If filed after December 31st, the penalty increases to 10,000 rupees. For taxpayers with total income not exceeding 5 lakh rupees, the maximum penalty is limited to 1,000 rupees. Beyond penalties, non-filing can lead to other complications. You cannot carry forward certain losses to subsequent years if you miss the original filing deadline. Processing of refunds gets delayed, and you may face difficulties in obtaining loans or visas, as income tax returns serve as important proof of income and financial standing. Filing your income tax return for financial year 2025 to 2026 requires understanding your obligations, gathering proper documentation, choosing the correct form, and meeting the applicable deadlines. Timely and accurate filing not only keeps you compliant with tax laws, but also helps you maintain a clean financial record and avoid unnecessary penalties and complications. Let's recap the key points about income tax return filing. Remember, you must file if your income exceeds the basic exemption limit, or if you have foreign assets, deposits over 1 crore rupees, or electricity bills exceeding 1 lakh rupees. The standard deadline is July 31st, but this extends to September 30th for audited cases and October 31st for international transactions. Choose the correct ITR form, gather all necessary documents including Form 16, bank statements and investment receipts, and file on time to avoid penalties of up to 10,000 rupees. Thank you for watching. We hope this guide helps you file your income tax return confidently and on time. Stay compliant and financially secure.